Hey guys, what's going on? It's Matt again. This video, not going to cover any particular stock, but want to jump into stocks that I have previously covered on this channel and just want to track on how everything did. Now, you may have subscribed or you may just be catching this video unsubscribed and may want to know what kind of stocks does this guy cover and how have they done since he's covered them. Well, this is going to be the video to cover that. I think it's important to go back and take a look at the different due diligence items that we had looked through, the due diligence that I have done, and to kind of reflect on what did I do right, what did I do wrong, so that way I know how to adjust moving forward and make sure that I'm always trying to give you guys the best information that I possibly can. So with that, we're going to go way back, going back to BlackBerry. BlackBerry was one of the first stocks that I actually covered on this channel. And back when I covered BlackBerry, I'm not gonna lie, I initially thought it was gonna be a loser because I had seen so much potential in this stock. And I had bought 400 shares back then at roughly, I think actually my position was a little smaller, but I bought a few hundred shares at $8.52 on December 8th. And I ended up increasing my position as the stock dropped because it started dropping to $7.50, $7, and ended up getting all the way down to I think like $6.70. And then that's when it started its upward trajectory. And it started getting picked up and hyped by Reddit and Wall Street Bets, and it shot up to over 20 some dollars. Currently the stock sits at $10.84. So even though the return could have been a lot greater, we're just gonna focus on what the price was when I covered it and what the price is today. So now with the price at $10.84, you're looking at a 27% return had you bought it 3 months ago when I initially covered it and sold today. Not even taking into account the fact that it was over $20, which would have given you like a 250% return had you sold at some point around the peak. Moving on to Peloton. This one actually goes back to Sir Jack a lot on one of the first moves that I covered of his, when he made a one-day move on Peloton. If you don't know who Sir Jack is, then you can click up here and take a look at those old videos. Sir Jack on Wall Street Bets is notorious for just making one stock YOLOs for his entire portfolio, where he dumps everything into one stock based on a thesis that he has a lot of conviction on, and tries to swing trade his way to $10 million. That's his goal, and I hope he gets there. But so on this stock, he bought in, he sold immediately a day later, but let's say you didn't sell. Back then, it was November 19th, and the stock was at a price of $105.26. It is currently sitting at $139.62 for a 32.6% return on your money in just 3 months. That's nuts. APXT. This one has a special place in my heart because it actually was the first SPAC that I covered. And I was covering a lot of SPACs at the time. And I really enjoy SPACs. I enjoy kind of how it's all put together, from how retail traders can get into a stock pre-merge and being made public on the stock market. So APXT is the stock for Avepoint, and back then when I covered it on November 27th, it was $14.20. Now it's currently sitting at $14.35, so it's more or less completely gone flat. However, that isn't really telling the whole story. It has had quite a few peaks over $16 for more or less a 10 to 15% return. That could have been significant had you taken advantage of an exit strategy at one of those peaks. But had you not done anything, more or less you would have barely made any money on this one. Now, GameStop. I started covering GameStop November 23rd. And back then I had bought a position in at $13.90. If you've been following me, you know that I sold at like the worst time. And I regret it so much. I had left so much money on the table. I sold it around $18.50. Now, as most of you, if not all of you know, GameStop had ended up rising to over $300, over $400. One morning, it actually broke $500. I remember seeing the price at $503. You can click up here to take a look at that short video that I filmed that morning, completely in disbelief. But right now, the stock sits at $42.88. let's pretend you didn't sell. Let's pretend you're diamond handing and you bought when I initially covered and you're now holding today. You would have a 208% return, not even taking into account any of the movement above $42.88. That's crazy. PSTH, another SPAC I have covered that actually has no merger target in sight still. I initially covered this one on November 30th, and back then I had covered why I think it's going to merge with Stripe. So again, another stock that I covered roughly 3 months ago. Back then I thought it was going to be merging with Stripe. Who's to say what it's going to be? We still don't know for sure. Back then the price was at 26 bucks. Today it's at $29.93. I did see recently that it shot up over $32 based on some press coverage with Bill Ackman. This one, of course, trading at a premium for SPACs with no merger target simply because Bill Ackman has quite the hype factor. But had you invested at $26, you're talking about a 15% return in the last 3 months with no merger target in sight, which is pretty crazy for a SPAC. One that I got wrong. So this is going to be one of the first ones that I got wrong, which is AirBNB. I covered this on December 18th. I said, do not buy the stock yet. It's actually in the title of the video. At the time, the stock was at $157.30. Since then, it has risen 28.4% to $202. Now, I said don't buy the stock yet at the time because I knew that as a stock that is more or less overvalued for the numbers, for its financials, and I'm highly oversimplifying this, I am still banking on the thesis that the stock will drop as the lockup period for inside investors starts to come closer. And as it comes closer, I imagine that the stock is going to go down, 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 which is actually what we're seeing on Palantir right now. I believe Palantir is actually getting oversold, and I think it's actually a great entry point in Palantir. My funds are currently tied up, which I hate because I'm actually getting out of Robinhood and I have all funds being transferred over to Webull, and it takes quite a bit of time. So I've been sitting on the sidelines as these red days have been hitting, and it's driving me crazy because all I want to do is buy when I see red. But anyway, going back to AirBNB, I really love the company. I really love everything about it. I clearly, could have made 28% of my money on whatever I'd put in there had I bought in on IPO. So as of right now, I am sitting on this one being wrong for me, but I may be right in the long term with my thesis that the lockup period will drop it below what the IPO price was. Who knows? We'll see. Moving on to CRSR. This one was another Sir Jack move, and Sir Jack had quite some conviction on this one. I actually believe he's still holding because I haven't seen another post from him. But initially this one, when I covered it, the price was at $38.96. I remember, I believe I got in around $37 like a day before or something like that. I may be remembering this a little incorrectly, but it's currently sitting at $40.22 for a 3.2% return. However, if you stuck to the thesis that I covered in that video, the thesis was, and this was based on Sir Jack's thesis, so I don't want to take credit for this, but the thesis was, it was a play on earnings, the February earnings, which has already come and gone. And leading up to earnings, the price did shoot up to over $46 at one point. So there were multiple exit points for this over 20% return in a short span of time. So had you gotten in this one, this was actually a pretty nice play. Going on to the steel stock plays. So giving some homage over to Vito Corleone, the OG of the steel stocks on Wall Street Bets, who got banned and is now on his own sub that I am currently following, and I still read all the stuff on that sub. But back then I got into SCHN, which is Schnitzer, CMC, CLF, Nucor, and those stocks have actually done really well since then. I'm not gonna lie, it hurt in the beginning because it almost seemed like we bought at the peak at that time, and that was around December 21st, and it started going down for a while, but it has been on a nice slow ramp up, just chugging along. So SCHN at the time was $29.91 and is currently sitting at $35.30, and that one being a pure steel scrap play, which I still think is a great play. I don't think we're anywhere near the top on that one. CMC was at $20.22, currently sitting at 23.48%, or sorry, $23.48 for a 16% return. CLF was $13.85 at the time and is now at $16.94 for a 22% return. Nucor was at $54.14 and it's now at $58.05 for a 7% return. So we've got multiple, 3 double-digit returns, one of them being over 20% and one at 7%. Great returns on your money for just 2 months. Steel stocks I still see as a great play even now. So if you want some due diligence on that, click up here. Moving on to ARKG. So for any of you that have fully watched my genomics video, I applaud you because that one was a very long video. I remember spending about like 15 hours of due diligence on that and learning everything I could about genomics and realizing that ARKG is really the play in the genomics space. You definitely don't need my 45-minute video to learn that or understand that. But if you did want to learn about genomics, then that is a great video for you. At the time when I covered it, it was $93.14 and it's currently sitting at $107.46 for a return on your money of 15.4%. I originally covered this on January 5th. Now for one of my big losers that hurts so bad. This one probably hurts the worst to me. This is the one that I'm hoping. I shouldn't say I'm hoping because I know it will go up over time. It's too good of a company in my opinion to stay at the level that it's currently at. But as of right now, it is one of my losers. And that is what was originally GIVJHIV. It is now UWMC, United Wholesale Mortgage. And United Wholesale Mortgage at the time, when I covered it on December 14th, was trading at $11.19. It is currently at $8.31 for a 25.7% loss. Oh, this one hurts. It hurts. It's one that it pays a dividend, but it's such a tiny silver lining because a dividend it will barely cover the 25% loss. But it is one that I am still holding. I am personally holding. I'm obviously offset by a lot of the other winners that I've been investing in, but this is a company that I like. I am personally a real estate investor and I love having a stock in the real estate space, but I understand that right now people are just focusing on the valuation of this, which kind of strikes me as weird just because the whole market in itself is overvaluing so many stocks. This happens to not be one of them. Hey, it is what it is. One that I made on a potential vaccine stock. So this one I said was going to be either a 2x or a 10x or a 0x because this one is mainly riding on whether or not it is included in Biden's stimulus bill for pushing vaccines as quickly as possible out to the public. This is CERC. I covered this on January 10th, so about 5 weeks ago, and it was at a price of $2.50. This is one of the only penny stocks I've covered. Since then, it's gone up 74%. This is a big winner. It's at $4.35. So if you happen to buy off that video and are still holding, you're doing not too shabby. We're about to hit that ×2 mark. And I see this going up as long as it's included in that bill. VIH, one of my favorites. I love Bakkt. I love Bakkt so much. VIH being the SPAC that is gonna merge with Bakkt. I covered this on January 24th at a price point of $15.02. It's currently sitting at $19.33 for a 28.7% return on our money. Man, that is nice. Now we're gonna look at one of the few options plays that I covered on this channel, and that is Berkshire Hathaway Class B calls, long calls. We're talking 2023 calls. No, I'm sorry, 2022 calls, January 2022 calls at a strike price of $300. These were $2.50 at the time, so $250 because you're buying them for $100 per contract, 100 stocks per contract, and they are currently being bought for $3.22 for a return on your money right now. If you were to sell right now at 28.8%. Now that is a really nice return. However, that's just the beginning in my opinion. I believe this is going to go up far higher once earnings comes out for Berkshire Hathaway Class B stock. Now, two losers that I have, because everything isn't all winners. I know I've covered AirBNB as being a wrong call of mine, UWMC being a wrong call of mine as well from a perspective of right now, even though I still see UWMC going up in the long term. But some other losers that I've had are the two silver stocks that I was covering, which is PSLV and AG. PSLV has lost 5% since I covered it on February 1st, and AG has lost 21% since I covered it on February 1st. And the one thing I do want to put a disclaimer on with silver is in that video, I very explicitly said silver going up depends highly on people investing in silver stocks where they can pull out the physical silver. I really only saw silver stock squeezing up, and it's not a short squeeze by any means, but I saw a price squeeze potential if investors were seeking physical bullion to back their investment. If so, that would definitely highly put a squeeze on supply, which would then drive up demand, which would then drive up the price. However, the likelihood of people in mass ordering silver, I never ever try to doubt Wall Street Bets or anybody else or any other community out there looking at any of these kind of stocks, but it's very tough when the bar for ordering silver is so high. You need such a large amount of silver stock in order to actually order the physical bullion to be shipped to your place. So moving on to energy stocks that I covered, which is NextEra Energy and VST, Vistra Corp. I covered these on February 4th, so about 2 weeks ago. And NEE has gone down almost 6%, but VST has gone up almost 9%. Now, regardless of these offsetting each other, I really think that the catalyst for these has not been seen yet, because this is all dependent on a Biden stimulus bill, government stimulus bill for pushing funds into renewables. And with that, I think these two stocks can benefit greatly from this, and I think their stock will definitely go up if the stimulus bill affects them the way I think it will. So as of right now, I'm still sitting tight on these, regardless of, technically the 8.6% that VST has gone up outweighing the 5.8% that NE has gone down, even though it's a net positive for those two. I really think as of right now, it's just too early to say, was that a right call or a bad call? My next one is Skillz. This is another one of my favorites. SKLZ, I covered this on February 8th, so about a week and a half ago. It was at a price of $42.80. And I definitely explicitly said, this stock is going to pull back, but it's not stopping me from buying a very small position now at the time, because I didn't want the price to scare me just from getting in, because of course we want to take that position of we buy on the dips and we average over time and we just invest in stocks that we believe in. It's currently sitting at $36.10 for a 15.7% loss. I'm going to consider this a good call on my part because I said it would pull back, and I said I can definitely see it going to the 35 range. It wouldn't even bother me if it went to the $20 range, because I have so much conviction in this one that I would just buy up more shares, which is exactly what I intend to do as soon as these funds settle into Webull. The next one I covered was about a week ago on February 10th, which is SFT. I really like SFT. SFT has gone up 5% since I've covered it. A little over a week ago, it went from $10.10 to $10.60. The last two I covered are Tesla and AMD. These are both down roughly 4% since I covered them under a week ago. I really like Tesla. I bought a large position in them. I don't even care that they're down right now, because I just see the support as a really strong support just underneath that 800 level. And AMD, it's just too soon to really see how that plays out. So that is my list of winners and losers. I want to say I'm batting roughly an 80% on picking some winners here. Granted, I can't take credit because I am relying on other posts, other people, different things I see online, and then I go and do my own due diligence and pile in and try to see what I can find. So let me know what you guys think. What positions have you taken in any of these stocks? Leave a comment below. Like, it definitely helps. I love doing these kind of videos because I always want to make sure that I'm being held accountable as well, because if I'm just picking a bunch of losers, then what are you guys subbing to me for? So I am making some good calls on these, following along on the advice of others and seeing the positions that other people are taking and investigating these stock plays. But at the end of the day, I am putting my money on these. I am putting my money where my mouth is, and I've been making some good returns on these. So hopefully you guys have been as well. If you're new here, take a look at any of these. Take a look at the thesis and what's behind it and see if you'd like to get involved. But of course, always remember, I am not a financial advisor. I am not telling anybody to go and buy this stock solely on watching this video. I think you all need to go do your own due diligence and find out if it's something that you guys believe in. And if so, leave a comment, let me know. I'd love to discuss it. I try to reply to everybody in the comments. And we also have a Discord channel that you can join if you click down below, where we talk about stocks and honestly anything. So can't wait to see you guys on the next one. See ya.